Hello friends, I hope you are all doing good. Welcome back. So in our previous class we have discussed about value of supply. So almost all the topics have been covered. The major topics have been covered by us, and now we are today in our today's lecture we are going to discuss a beautiful topic. The name of the topic is what, sir? Input tax credit. Nice topic, important topic, and there are some good amendments which are there in this which have happened in this particular topic, and which they have not asked in the examination. Previous examination also they have not asked questions with respect to such amendments. So this is an important chapter, a very important chapter. Even if amendments are not there, it is an important chapter from your exam point of view. Input tax credit, it is the backbone of your GST law. So now, because there are good amendments in this particular topic, I will revise this topic from the class notes which I have written, because I have explained all those amendments, etc. So those examples will help you understand this topic even more in a better manner. So let me straight away start my discussion on this beautiful topic called as input tax credit, one of the most important topic for your examination. Okay, input tax credits. Input tax credit, input tax credit. Sir, what do you mean by input tax credit? Input tax credit means credit of input tax. So if you have an input tax, so if you take the benefit of that input tax, if you take the credit of that input tax, then it is called as input tax credit. Now, what are the sources of input tax? Basically, input tax you get it from inward supply. Inward supply can be either of goods or it can be of services. So inward supply of goods are further divided into capital goods and normal goods or inputs. Capital goods means what, sir? Capital goods means those goods which you are capitalizing in your books of accounts, and normal goods means what, sir? Any goods other than capital goods. So here the lawmakers have left completely on you whether to decide whether you want to call something as an capital goods or normal goods. So they say if any goods which you are capitalizing in your books of accounts, recording on the asset side of your balance sheet, that will be treated as capital goods, and all the other goods are treated as normal goods or inputs, and services are divided only into one category, which is input services. Now, what do you mean by input tax, sir? Basically, sir, you said input tax credit means credit of input tax. What is this input tax? Input tax basically in simple words means the tax which is paid by you on your inward supply. Whatever goods and services are supplied to you, on that whatever taxes you are paying, that is called as your input tax. Now, it also includes the tax which you are paying under reverse charge. So under section 9 subsection 3, section 9 subsection 4 of CGST Act, section 9 subsection 394 of SGST Act, section 7374 of UTGST Act, 5354 of IGST Act, you pay some taxes under reverse charge. You have to pay some taxes under reverse charge. Those taxes which is paid by you under reverse charge, that is also your input tax. And the taxes which is paid by you on import of goods under customs law. So whenever you are importing anything to India, you have to pay the taxes on those particular things. Now, whatever taxes you have paid on import of goods under customs law, that also will be treated as input tax, but it shall not include what, sir? Input tax shall not include the tax which is paid by you under section 10. Now let us start the discussion on this chapter. Section 16. Section 16 talks about what, sir? Eligibility and condition. Who is eligible to take input tax credit and what are the conditions for taking input tax credit? Section 16 talks about it. Section 16 subsection 1 says every registered person is eligible to take input tax credit. Who is eligible? Every registered person is eligible to take input tax credit on the goods or services or both which is used or intended to be used by him in the course or furtherance of business. Please note, for taking input tax credit you should be a registered person. You should be a registered person. But for paying the taxes, the government will collect the taxes if you are a taxable person. So if you want to claim input tax credit, the first and foremost condition is that you should be a registered person. You should be a registered person, and you should be having any goods or services which you are using, or you have an intention to use it for your business purpose. So say for example, if you have purchased few products, say 6 months back, say on 10th of December I had purchased an AC, I put to use that AC on 10th of May 2023. December 2022 I purchased, May 2023 I put to use. After 6 months I am putting it to use. So when can I take input tax credit? On the date of purchase or on the date of putting it to use. Under GST law it says whether you can take input tax credit on goods or services or both which is used by you or intended to be used by you or intended to be used by you in the course or furtherance of business. So if you purchase anything for your personal purpose, you cannot take input tax credit. Why? It should be used or intended to be used in the course or furtherance of business. Section 16 subsection 1. Now the amendments, important amendments are with respect to this conditions. Very beautiful conditions are there. Very beautiful amendments are also there in this particular topic. Section 16 subsection 2. So during the beginning of the law, when this section was introduced, there were only 4 conditions. Then from last attempt they added 5 conditions, and from this attempt they added 6 conditions. So they are actually adding the conditions day by day. They are increasing the conditions based on which you can take input tax credit. When the law started, no, there were only 4 conditions, very simple condition. Now you have 5 conditions. Now you have 6 conditions basically. Last attempt you had 5 conditions. Now in your examination you have 6 conditions. Very beautiful condition, important conditions, very beautiful and important conditions. Section 16 subsection 2 talks about conditions. If you want to take input tax credit, who are you? You are a registered person. See, first 16(1) says a registered person can take input tax credit. So a registered person, if you want to take input tax credit, you will have to satisfy these conditions. Whatever conditions are specified over here, you will have to satisfy these conditions for taking input tax credit. Please concentrate carefully. Nice and beautiful conditions they have added. Now first condition says he in the sense registered person, he should have the possession of tax invoice, debit note or any other tax paying document. So if you want to take input tax credit, you should have the possession, you should have the document with you, you should have the tax paying document with you, you should have the document with you, you should have the tax paying document with you. It can be a tax invoice, it can be a debit note, or it can be any other tax paying document, such as in case of import of goods, bill of entry. In case you are taking any goods from an input service distributor, then the input service distributor invoice. Then in case you are taking input tax credit on RCM, on the inward supply liable for reverse charge, then that RCM invoice. So you should have the tax paying document with you for taking in, you should have the possession, you should have the document with you. Then he in the sense registered person, he should have actually receive the goods or services. The registered person who wants to take input tax credit, he should have actually received the goods and services based on which he is taking input tax credit. Sir, what if I have not actually received the goods or services? You cannot take input tax credit. You cannot take input tax credit. But sir, oh sir, I have a question, sir. What is your question? Sir, my question is, sir, in my business, no sir, what we do, you know, sir? Sir, see sir, Karina had asked Priya, Karina Kapoor placed an order to Priya Sarees, sir. Karina Sarees placed an order to Priya Sarees to supply 100 Mysore silk sarees or 1000 Mysore silk saree to Anushka. Now what has happened, you know, sir, over here, the person who gave the order is Karina, and the person to whom the order is given is Priya, and the person to whom the goods are delivered is who, sir? Anushka. Now I am Priya, I have received an order from Karina to deliver the goods to whom, sir? Anushka. So for me, who is my customer? My customer is Karina, correct? My customer over here is Karina. My customer has told me to deliver 1000 sarees to Anushka. So sir, in this case, I am going to give an invoice to Karina. Priya Sarees is going to give an invoice to Karina Sarees. However, the goods are delivered to Anushka Sarees. So sir, second condition will not be satisfied over here, no sir. Second condition says he should have actually received the goods or services. Karina Kapoor over here has actually not received the goods or services. So can Karina take input tax credit, sir? Oh sir, my question to you is, can Karina take input tax credit on this particular item? Can Karina take input tax credit on this item? Sir, because second condition says that you should have actually received the goods or services. In the present case, it has not actually received the goods or services. Now for this there is an exception. See, normally the registered person should have possession of tax invoice, he should have actually received the goods or services. So if the registered person wants to take input tax credit, then he should have actually received the goods or services. However, there is an exception for this. In short, I call it as bill to ship to concept. Exception to this is what, sir? Bill to ship to concept. So what is this exception? What is this bill to ship to concept talking all about? Now what is this exception telling? Where the goods are delivered by the supplier, where the goods are delivered by whom? Priya Sarees. I'll just tell the explanation, then give the example. Where the goods are delivered by supplier to a recipient on the direction of registered person, then it will be deemed that the registered person has received the goods and services once it is received by the recipient. Meaning what, sir? If on the direction of Karina Sarees, if Priya Sarees has delivered the goods to Anushka Sarees, then it will be deemed that Karina Sarees has received the goods or services once it is received by the Anushka Sarees. So here Karina can take input tax credit. So exception bill to ship to concept, where on the direction of registered person, if the goods or services are both are delivered to a recipient, then it shall be deemed that the registered person has received the goods or services once they are received by the recipient. Condition number 3, supplier should have paid the taxes. If you want to take input tax credit, you being a registered person have to take input tax credit, make sure that the supplier has taken input tax credit, and then he should have filed the returns. He, in the sense, registered person. The registered person who is taking input tax credit, he should have filed the returns. Obviously, you will have to tell the government, know that you have ITC available with you. How will you tell the government? By filing your return. So you should have filed your return. He should have filed the return. Now next 2 conditions, new conditions, very beautiful and important conditions. Sir, you said that supplier should have paid the taxes. How will I come to know, sir? Sir, you said supplier should have paid the taxes. If the registered person has to pay, take the input tax credit, then the person from whom he is purchasing, the supplier should have paid the taxes. How I, being a registered person, will come to know whether the supplier has paid the taxes or not, sir? For that, they have prescribed a mechanism. What happens under GST law? I'll just show you this. See, payment of tax and I think returns under GST law, lectures are completely uploaded, full lectures are completely uploaded on YouTube. You can watch those lectures for detailed discussion, but I'll just give some small insight about this. See, under GST law, sales are called as outward supplies, and for sales you have to file a return called as GSTR1. Now this GSTR1 is required to be normally filed by 11th of next month. So whatever month it is, 11th of next month you are required to file the return. For example, June month, 11th of July is the due date. So supplier will have to file GSTR1. Whatever GSTR1 supplier is filing, the information with respect to those documents or with respect to those invoices will go to GSTR2A and 2B of recipient. It will go and sit where? It will go and sit in GSTR2A as well as GSTR2B of the recipient. So what is the difference between GSTR2A and GSTR2B? See, supplier has to file this GSTR1 within which date, sir? 11th of next month. Now if he files this return within this due date of 11th of next month, if he files it within the due date of 11th of next month, meaning if the supplier files this return by 11th of next month, meaning if he files it within the due date, that information will go to the recipient's GSTR2A as well as GSTR2B. If the supplier has filed the return within 11th of next month, it will go and sit in GSTR2A as well as GSTR2B of the recipient within the due date. But if the supplier has not filed his GSTR1, if the GSTR1 is not filed by the supplier within the due date, meaning he files it after 11th, then it will go and sit in GSTR2A of the recipient of that month, but it will not go and sit in GSTR2B of that month. It will go and sit in GSTR2B of the next month. It will go and sit in GSTR2B of the next month. Sir, I'm not understanding this, sir. Can you please repeat, sir? Can you please repeat this, sir? See, very simple. Say very simple. GSTR2A and GSTR2B. Normally, if I am making any sales, I have to file a return. What is that return called? That return is called as GSTR1. Okay, once I file my sales return, if I have made B2B supplies, so that B2B supplies related information will go to the recipient also. Where will that information go? In GSTR2A as well as GSTR2B. It will go and sit in GSTR2A and 2B, both GSTR2A and 2B, if I have filed my return within the due date. If I have filed my GSTR1 within the due date, then the recipient will receive the information in GSTR2A as well as 2B. But however, if I have not filed my GSTR1 within the due date, the information will go and sit in GSTR2A of that month and GSTR2B of next month. GSTR2B of next month, because it is not filed within the due date. Basically GSTR2A and 2B is auto-populated information. GSTR2A is going to give you the information about all the purchases which is made by you in a particular month, irrespective of whether the supplier has filed his return within the due date or not. Irrespective of whether the supplier has filed the return within the due date or not, if you have made a purchase in a particular month and if supplier has filed his GSTR1, it will come and sit in GSTR2A, irrespective of whether he has filed it within the due date or not. However, if you have made a purchase in a particular month and the supplier has filed the return within the due date, it will come in GSTR2A as well as 2B of the same month. it will come in GSTR 2A as well as 2B of same month. But if the supplier has filed it after the due date, it will come in GSTR 2A of the same month, because 2A gives the information of all the purchases made by you in a particular month, irrespective of that time limit, irrespective of the time when the return is filed by the supplier. But 2B will give the information only about those invoices which the details of which is filed within the due date by the recipient. So if it is filed after due date, next month's 2B it will come. So GSTR1 filed within the due date, information will get reflected in GSTR 2A of the same month as well as GSTR 2B of the same month. But however, if it is GSTR1 is filed after the due date, information will get reflected in GSTR 2A of the same month and GSTR 2B of the next month. GSTR 2B of the next month. To explain this, I'll take a small example. Say for example, in the month of July 23, I made purchases from 10 different people. I made purchases, Priya Sarees made purchases from 10 different people, out of which 8 people filed their GSTR 1 and 2 people did not file their GSTR 1. So can I say when 2 people did not file the GSTR 1, the information will not come in GSTR 2A as well as 2B? So because the information is not coming in GSTR 2A as well as GSTR 2B, I cannot take input tax credit on these invoices. On these 2 invoices, I cannot take input tax credit at all. I'll repeat. I made purchases from 10 different people. Out of it, 8 people filed their return, 2 people did not file the return. 2 people who did not file the return, the information will not come in my GSTR 2A as well as 2B, meaning that information is not communicated to me. Now, as per the new condition, I will not be able to take input tax credit because this information is not getting reflected in my GSTR 2A as well as 2B. But however, 8 people have filed their GSTR 1. 8 people have filed their GSTR 1. Now let us take a case wherein out of these 8 people, the people who have filed it within the due date and filed it after the due date. Now if these 8 people have filed within the due date, then the information will come in GSTR 2A as well as 2B. I can take the full ITC. If it is filed after the due date, that information will come only in 2A, not in 2B, because if it is not coming in 2B, I cannot take input tax credit in the same month. Say for example, out of these 8 people, 6 have filed GSTR 1 within the due date and 2 have filed after due date. So with respect to these 6 invoices only, I can take input tax credit. These 2 invoices I cannot take input tax credit now in this particular month. I can take the ITC in the next month. The input tax credit can be taken by me in the next month. So this is the new condition which is added. What is that condition saying, sir? A registered person can take input tax credit if the details of the invoice are furnished by the supplier in his GSTR 1. A registered person can take input tax credit if the supplier has furnished the details in his GSTR 1 and the same is communicated to the registered person, and the same is communicated to the registered person. Where will it be communicated, sir? In GSTR 2B. Then one more condition is added now, which says the details of input tax communicated to the registered person should not be restricted, meaning it should not be blocked, or there should not be any restriction on these details which are communicated to the registered person. Then if the goods, there are 3 provisos over here. Proviso number 1, if the goods are received in lots or installment, ITC can be taken upon receipt of lost lot. And if the recipient does not make the payment to the supplier within 180 days, if the recipient does not make the payment to the supplier within 180 days from the date of invoice, then whatever ITC is taken from him, that ITC should be reversed along with interest at 18% per annum. This interest is required to be calculated from the date of taking input tax credit till the date of reversal of input tax credit. So what is this condition telling? If the recipient is not making the payment to the supplier within 180 days from the date of the invoice, then whatever ITC is taken by the recipient, that ITC is required to be reversed, and this reversal should be along with interest at 18% per annum, calculated from the date of taking the input tax credit till the date of reversal of the input tax credit. Now there is a small amendment over here also, clarification basically, and a question can be asked on this point. Now say for example, I made a purchase on 1st of April worth rupees 1 lakh and GST rate is 12%, so the GST amount is 12,000 rupees. I had taken input tax credit on this particular invoice while filing my GSTR 3B, that is on 15th of February, 15th of May I took input tax credit. Now I made the payment to this invoice on 20th of December. 20th of December I made the payment for this invoice, because I have not made the payment within 180 days. So from this date of invoice I should compute 180 days. From this date of invoice I compute 180 days. 180 days is over on 27th of September. I have not made the payment till 27th of September. When did I make the payment? On 20th of December. So what will I have to do? I will have to reverse the input tax credit on this particular invoices. 12,000 rupees ITC I took on this date, 15th of May. I should reverse that input tax credit. I have reversed that input tax credit on which date, sir? 20th of October. At the time of filing my September month return, I have reversed my input tax credit. Now the question is interest computation. From which date should the interest be calculated? Interest is required to be calculated from the date of taking the credit till the date of reversal of input tax credit. So I have took the credit on 15th of May and reversed the input tax credit on 20th of May. How many days are over? Just see it. It comes to 158 days. So I will have to reverse the ITC, 12,000 rupees. Anyways, I am going to reverse. This reversal is along with interest at 18%. So 12,000 is the ITC amount and 18% is the interest rate into 158 days divided by 365 days. Now, this is something which is very simple, sir. Now, what small clarification they have given? Say in between, if you make any part payment, then and the other part which is not paid only on that unpaid amount, whatever input tax credit is there, that you will have to reverse, and only on that unpaid amount, whatever input tax credit is there, only on that unpaid input tax credit amount you will have to pay the taxes. So that small clarification they have given, meaning say for example on 15th of July I paid 60,000 rupees. So what is unpaid amount? 40,000 rupees that I paid in the month of December. So when I am reversing the input tax credit, no, I should reverse only tax on 40,000 rupees, which comes to 4,800 rupees. Now I should reverse not the entire amount of 12,000. I don't have to reverse the 12,000 rupees because I have made a part payment. So I will have to reverse how much, sir? I will have to reverse only 4,800 rupees and the interest also should be paid only on this 4,800 rupees. Sir, in future I am making the payment. No, sir. See, sir, I reverse the input tax credit over here. See, sir, over here I reverse the input tax credit. When I make the payment in future, can I take input tax credit? Yes. Next conditions, next proviso says ITC can be availed once the payment is made. All this discussion which we did is given in rule number 37. That is all given in rule number 37. Yeah, so these are the different conditions. This was an amendment. Then section 16 subsection 3 ITC in case of capital goods. In case of capital goods, you can take input tax credit if you are not claiming depreciation on tax component of capital goods. Meaning, say for example, you have purchased a capital goods for how much? You have purchased a capital good for 10 lakh rupees and the GST on that is 18%. So 1,80,000 is GST. So the total value which is 11,80,000. So if you capitalize only 10 lakh rupees, that means you have not capitalized the tax amount. So you can take input tax credit. See, if you capitalize 11,80,000, that means you have capitalized the tax amount also. When you capitalize the tax amount also, you are going to claim depreciation on this amount. When you claim depreciation on this amount, you cannot take input tax credit. Lawmaker says, I will not give you both the benefits. And there is one more amendment, beautiful amendment, important amendment. Section 16 subsection 4. Section 16 subsection 4 talks about last date for claiming input tax credit. If there is any invoice in respect of which you have forgot to take input tax credit, then the last day to take input tax credit will be 30th November of next financial year. Beauty. By what time you can take input tax credit? 30th November of next financial year, or the date of filing annual return for that financial year. For whatever invoice it is for that invoice for that financial year, the date of filing annual return for that financial year, whichever is earlier, either 30th November of next financial year or the date of filing annual return of that financial year, whichever is earlier. See, normally the due date of filing annual return is what, sir? 31st December of next financial year. For example, financial year 22-23, which is the financial year for your examination, 31st December 2023 will be taken as 31st December 2023 is the due date of filing annual return. Now say for example, what is the last date of taking input tax credit? We will see with an example. For example, invoice for October 2022 of 10 lakh rupees and GST amount was 1,80,000 rupees was omitted and no ITC was availed on such invoice. So you forgot, and ITC also is not taken by you. What is the last date for taking input tax credit? If the annual return is filed on 15th of August or 20th of August. If annual return is filed on 15th of August, so 15th of August or 30th November, whichever is earlier. However, if annual return is filed on 20th of December, then 30th November or 20th of December, whichever is earlier. Now rule number 36 talks about that other document based on which you can take input tax credit. Rule number 37 is that 180 days rule, that also we have understood. Now a new rule they have added, beautiful rule. They have added a new rule called as rule number 37. This is also a small amendment. Now this topic contains lots of amendment. You will have to be very careful in this topic. This topic contains lot of amendments. You will have to be very careful. Rule number 37A, new rule has been added. Nice and beautiful rule. I mean, I expect that question on this rule will be asked for final students, but yeah, because this rule is applicable to you guys also, they may ask you a question. They may ask you a question, very simple rule, and obviously if they ask you a question, it is a lottery for you. Now see the beauty of this rule. See, normally Karina Sadis, Priya Sadis. Okay, Priya Sadis, I am Priya Sadis. Okay, whenever I give examples, I am always Priya Sadis. So, Priya Sadis, in the month of January 2023, I made purchases from Karina Sadis. The invoice date was 15th of January 23, and the invoice value was 10 lakh rupees, and GST amount is 1,20,000, and total invoice value is 11,20,000 rupees. Very simple. Now Karina had filed her input tax GSTR1. So Karina filed her GSTR1 within the due date. For the month of January, she filed her GSTR1 within the due date. If she files her GSTR1 within the due date, that means what, sir? The information is coming in GSTR2A as well as GSTR2B. Therefore, because the information is coming in GSTR2A as well as GSTR2B, I have taken input tax credit, and I also satisfy all the conditions specified in section 16 subsection 2. Therefore, I had taken input tax credit on this invoice. Priya Sadis took ITC on this invoice as all the conditions of section 16 subsection 2 are satisfied. Now what has happened? We'll continue the story. So I made a purchase in the month of January from Karina, for which Karina filed her return, and therefore I took the ITC because I am satisfying all the conditions. Now what happened? For this invoice, I made the payment to Karina in the month of March, meaning that 180 days condition is not applicable now. I made the payment to Karina in the month of March. So within 2 months, I made the payment to Karina. Okay. So I am not violating any conditions specified in rule number 37 also. Now what has happened? You see this carefully. Karina has, see, normally a registered person has to file two types of return, which is GSTR1 and GSTR3B. GSTR1 is for your sales, outward supply. GSTR3B is sales minus purchases and your net payment of taxes. Now what Karina has done? Karina has filed her GSTR1, but she has not filed her GSTR3B. Meaning Karina has filed given the details of outward supply, but Karina has not filed her GSTR3B, that is not paid the taxes to the government. Now what is the law telling? This new rule number 37A says, if Karina does not make the payment to the government within 30th September of next financial year, if Karina is not making the payment to the government within 30th September of next financial year, then the Priya Sadis should reverse the input tax credit on that Karina Kapoor's invoice. If Karina has filed her GSTR1, but if she is not filing her GSTR3B, by which date? By 30th of September of next financial year, then Priya will have to reverse the input tax credit. Priya had taken this ITC, no, she will now have to reverse this input tax credit. She will have to reverse this input tax credit. Sir, within which date she has to reverse the input tax rate? Within the due date specified under section 16 subsection 4, she has to reverse it. So she has to reverse the input tax credit by 30th of November of next financial year, or the date of filing annual return, whichever is earlier. Nice, beautiful point they have added over here. Rule number 37. In simple words, if the supplier has filed their GSTR1 and not made the payment of taxes in respect of that particular invoices by filing their GSTR3B, then the registered person will have to reverse the ITC on that invoices. If the supplier has not paid the taxes within which date, sir, 30th September of next financial year, then the registered person will have to reverse the input tax rate on the date of filing annual return or 30th November of next financial year, whichever is earlier. Okay, other topics there are not no amendments. I mean, major amendment is in section 16. Other topics there are no amendments. So we'll quickly discuss these other topics. Section 17 talks about what's the apportionment of input tax rate. Apportionment of input tax rate, section 17. Apportion means distribution. Section 17 subsection 1 says if you are using any goods or services partly for your business purpose and partly for any purpose other than business, you can take input, your ITC shall be restricted to so much of input tax as attributable to business purpose. So if you are having any goods or services which you are using partly for business and partly for any purpose other than business, then the ITC which can be taken by you will be restricted only to such part which is used for business purpose. Then meaning I have purchased iPad. Now this iPad 80% of the time I am using for my business purpose, 20% for personal purpose, 20% ITC I cannot take, only 80% ITC can be taken by me. Then 17.2. ITC on goods or services used partly for taxable supplies and partly for exempt supplies. So if you are having any goods or services or both which you are using partly for the purpose of making taxable supplies including zero rated supplies and partly for making exempt supplies, then ITC shall be restricted to so much of input tax as attributable to taxable supplies including zero rated supplies. Zero rated supply means what, sir? Export of goods or services and supply made to an SEZ unit or SEZ developer. Please note, section 17 basically talks about partly. See, if you are using any goods or services only for business purpose, take full ITC. Only for personal purpose, don't take ITC. But if you are using partly for business and partly for personal purpose, then 17.1 will apply. Take proportionately only for business purpose. If you are making only taxable supply, take full ITC. If you are making only exempt supplies, don't take ITC. But if you are making only zero rate supply, then also take input tax rate. But if you are making partly taxable and partly exempt supplies, then ITC shall be apportioned. Please note, ITC on all goods and services, no. ITC on only those goods and services which is partly used will be apportioned. Now section 17 subsection 3 says exempt supply. See, exempt supply means normally what is exempt supplies? Supplies which are nil rated, supply which are wholly exempt, and it includes non-taxable supplies. But 17.3 says exempt supply, for when you are calculating the value of exempt supply under section 17 subsection 2 also include these four things: supply attracting reverse charge, sale of land, sale of building, and transaction in securities. Okay, then section 17 subsection 4, apportionment of input tax rate in case of banking company. See, in case of banking company, the major income of a bank is interest income, and interest income is an exempt income. So exemption chapter says services by way of loans or advances insofar as the consideration is represented by way of interest or discount is exempt. So interest income is basically exempt income, and bank also has other income which is taxable income. So basically bank will have to follow 17 subsection 2. But for bank, following 17 subsection 2 is little difficult, because every month computation they have to do, how much taxable supplies, how much exempt supplies, etc. So what lawmakers have told bank, lawmakers have told, hey bank, wait, I'll give you an option. You do one thing, bank, instead of following 17.2, I will give you an option to follow 17.4. What will happen if I follow 17.4? If you follow 17.4, you just have to calculate your eligible input tax rate. Take 50% of eligible input tax rate, and the balance 50% shall lapse. It will go off. Provided that this option once exercised will be valid for entire financial year, and provided further that this restriction of 50% shall not apply to taxes which is paid by one registered person to another registered person having same PAN. Next, 17 subsection 5, blocked credit. Important, very important. Blocked credit. On these items you cannot take input tax credit at all. Section 17 subsection 5 block credit. Motor vehicle, on what items I cannot take input tax credits are motor vehicle which is used for transportation of person having seating capacity not more than 13. So if you have a motor vehicle which is used for transportation of goods, take ITC. If it is used for transportation of person, then see the seating capacity. More than 13 seater, take ITC. Less than 13 seater, normally ITC will not be given to you. However, ITC will be given on a motor vehicle having less than 13 seater capacity if it is used for further supply of motor vehicle, training in motor vehicle, or transportation of persons. Similarly, ITC is blocked on vessels and aircraft. You cannot take input tax rate on vessels and aircraft. However, if it is used for further supply of vessel aircraft, training of vessels and aircraft, transportation of persons and transportation of goods, then you can take input tax credit. Now normally motor vehicle, vessels, aircraft, you cannot take input tax credit. So sir, the question is service cost, repairs cost, insurance cost of this motor vehicle, vessels and aircraft, can I take input tax credit on that? Answer is no. On that also you cannot take input tax credit. However, you will be allowed to take input tax credit on these items, on service cost, repairs cost, maintenance cost, if ITC is given to you on purchase of that motor vehicle in point number A and point number B, or if you are a general insurance company or a manufacturer of motor vehicle, vessels and aircraft. Then ITC on foods and beverages, beauty treatment, health services, plastic surgery, cosmetic surgery, leasing, renting, hiring of motor vehicle, vessels, aircraft, or life insurance, health insurance, etc. On these items ITC cannot be taken by you. Normally on foods, beverages, outdoor catering, beauty treatment, etc. you cannot take input tax credit, except when you are in same line of business. Meaning I am a restaurant, I am taking services from another restaurant, so it is same line of business. My outward supply and inward supply are same. Then membership of club, health center, fitness center, ITC cannot be taken. Training, travel benefit extended to employees, ITC cannot be taken. However, on these 3 points, ITC can be taken when there is a statutory obligation on the employer to provide the same to the employer, meaning employee. So if there is a statutory obligation on the employer to provide these things to the employees, then he can take input tax credit. Sir, what do you mean by this? See, normally for foods and beverages, input tax credit cannot be taken. So there is a factory canteen, I am supplying food to my employees. Now can I take input tax credit? Normally no. Assuming I am purchasing this food from someone else, can I take input tax credit? Answer is no. But however, Factories Act is telling Dilip you will have to supply food to your employees. Now can I take input tax credit? Answer is yes. You cannot take input tax credit on works, contract, service, goods, services which are used for construction of an immovable property other than plant and machinery. Meaning if you are taking works, contract, services for construction of an immovable property, goods or services for construction of immovable property, you cannot take input tax credit. But however, if that immovable property is a plant and machinery, yes, ITC can be taken. Goods or services are both received by non-resident taxable person, ITC cannot be taken except where the goods are imported by him. So non-resident taxable person, whatever different goods and services he is purchasing when he is in India, he cannot take input tax credit on that. However, whatever goods are imported by him, he can take ITC on that. If you have paid taxes under section 10, on that items, goods and services, you cannot take input tax rate. Goods and services used for personal purpose, goods and services which are lost, stolen, destroyed, disposed of by way of gift or free samples, and goods or services on which tax is paid under 70 to 129, 130. Section 17 subsection 5. Section 18, input tax credit in special circumstances. Input tax credit in special circumstances. So the lawmakers have given some beautiful special circumstances. What will happen to your input tax credit in these special circumstances have been given over here. Section 18 subsection 1. Clause A says, if you are a person who is liable for registration, I'll directly discuss the provisions. If you are a person who is liable for registration and you apply for registration within 30 days of becoming liable, you will be allowed to take input tax rate on inputs which is held in stock 1 day prior to the date of liable for registration. 1 day prior to the date of liable for registration. Section 18 subsection 1 clause B talks about what is this? It talks about voluntary registration. So if you are a person who has applied for voluntary registration, you will be allowed to take input tax rate on you will be allowed to take input tax rate on inputs held 1 day prior to the date of effective date of registration, that is but 1 day prior to the date of grant of registration. If you are a composition dealer converting who is becoming a regular dealer, you will be allowed to take input tax rate not only on inputs but also on capital goods. You will be allowed to take input tax rate on inputs as well as capital goods held 1 day prior to the date of change, 1 day prior to the date of conversion from composition scheme to regular scheme. On capital goods, you should reduce the ITC by 5% per quarter from the date of purchase till the date of sale. And if you are a registered person whose exempt supply is becoming taxable supplies, you are making exempt supply, this exempt supply becomes a taxable supplies, you will also be allowed to take input tax rate on inputs as well as capital goods held by you 1 day prior to the change. On capital goods, ITC will be reduced by 5% per quarter or part thereof from the date of taking the input tax credit till the date of reversal. Section 18 subsection 2. On this 18.1 ITC, whatever ITC is given, no, on those goods and services, ITC will not be given if the invoice is older than 1 year. 18.3 says, in case of change in constitution of business by way of sale, merger, demerger, etc., or death of sole proprietor, etc., with a specific provision of transfer of liability, specific condition that liabilities also should be transferred, ITC of unutilized input tax rate of the old company can be taken by the new company. Section 18 subsection 4 talks about ulta. Section 18 subsection 4 talks about what ulta, sir? It talks about ulta of these 2 points. What is it talking about, sir? Section 18.4 says, where a regular dealer opts for composition scheme, a normal registered person becomes a composition dealer, or a taxable supplies becomes an exempt supplies. Now you would have taken input tax rate, now you will have to reverse it. ITC on the inputs and capital goods held 1 day prior to the change should be reversed, and on capital goods it shall be reduced by 5% per quarter or part thereof from the date of purchase till the date of change. 18.5 talks about rules for 18.1 and 18.4, and 18.6 an important section which says, in case you supply a capital goods or plant and machinery, if you sell a capital goods or plant and machinery, then you will have to pay the taxes to the government, or you will have to reverse the input tax rate as the case may be. How much tax will I have to pay, sir? The tax computed on transaction value as per section 15 on the sale price tax amount, or ITC reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. Please note the definition of quarter under GST law says, quarter means a period of 3 months starting from first day of a calendar year. So Jan to March is a quarter, April to June, July to September, October to December. So if any person would have purchased a product in the month of August, that means it is falling in this particular quarter. So that 3 months period should be taken as 1 quarter. It should not be calculated from August. Okay. So this is all about your input tax rate. Now we'll have to discuss some beautiful questions on this chapter. Let us discuss some questions on this beautiful topic of input tax credit. Question number 1. Nice questions. I'll solve 2-3 questions. I mean, other questions anyways we'll discuss. A registered person. So let us see the first question. A registered person, a registered supplier supplied goods valued 2,24,000 including GST 24,000 to Mohan Limited under forward charge on 15th August 2023, for which the tax invoice was issued on the same date. The inputs were received by Mohan Limited on 15th August 23 and Mohan Limited availed input tax credit on 18th August 23. But Mohan Limited did not make the payment towards the supply along with tax to the supplier. Is Mohan Limited eligible to take input tax rate? What are the consequences? Now what are they telling? That Mohan purchased something from someone and he did not make the payment. So he has taken input tax credit of 24,000. Now here you should apply what, sir? As per proviso to section 16 read with rule number 37. So this provision you will have to write. As per proviso to section 16 read with rule number 37, where a registered person does not make the payment to the supplier within 180 days from the date of invoice, then he will have to reverse the input tax credit which is taken by him. This reversal of input tax credit shall be along with interest. Such interest shall be computed from the date of taking the input tax credit till the date of making the payment. Now in the present case, since Mohan Limited has not made the payment to the supplier, Mohan Limited will have to reverse the input tax credit. So this reversal of input tax credit should be along with interest. Then will your answer be same as point A if Mohan Limited paid 1,20,000 on 20th November 23. So now the invoice date is 15th of August. He has made the payment on 20th of November. Invoice value is 2 lakhs. He has made a payment of 1.2 lakhs. So 80,000 is unpaid. So will your answer be same as point number A in this case? Answer is no, sir. In case where part payment has been made towards the invoice, the ITC shall be reversed only on such proportionate amount which is unpaid. So in the present case, the tax on 80,000 comes to how much, sir? Tax on 80,000 is equal to So GST rate is 12%. 8 12s 9,600. On this you will have to reverse this ITC along with interest. So please note, when I am saying you, it looks very simple. I mean, writing this is very difficult. Very difficult in the sense it will almost cover one full page. Your answer will almost cover one full page. Then Fun Pharma Limited, Private Limited, a registered supplier engaged in supplier ... They have given the details of purchases. Now you should tell whether he can take input tax credit or not. Inward supply of cab used for transportation of employees. Can you take ITC on the cab charges? Answer is no. Inputs consisting of 3 lots, out of which first lot was received during the month. So if you are receiving it in lots, then ITC can be taken upon receipt of last lot. So second case also ITC cannot be taken. Capital goods, out of 3 items, the invoice for 1 item was missing and the GST paid is 25,000. So there are 3 items over here. In this 25,000 invoice is missing. So how much ITC can I take? I can take only 2,24,000. So 2,50,000 minus 25,000. Outdoor catering services on Women's Day, you cannot take Women's Day, Gents Day, whatever day it is, you cannot take input tax credit for outdoor catering services. Then question number 3, sir, how will my answer be, sir? Write all the points. Okay, write all the points. Now inward supply, cab services used for transportation of employees blocked under section 17 subsection 5. Then sections, as per section 6, proviso to section 16, if the goods are received in lots, then ITC can be taken upon receipt of last lot. As per section 16, one of the conditions for taking input tax credit is the registered person should be having the possession of tax invoice. Since in the present case the registered person does not have possession of tax invoice for 25,000 GST, he cannot take input tax rate of that invoice. Then outdoor catering services is blocked under section 17 subsection 5. So these are the notes which you will have to give for this. Then when a registered person is engaged in manufacture of tanks, the company provides ... Purchase of machinery where debit note is issued. Can I take input tax rate? Is debit note treated as a valid document for taking input tax rate? Answer is yes, it is treated as a valid document. Yes, I can take input tax rate. Inputs purchased was directly delivered to Mr. Joe, a job worker and a registered person. So whatever goods were supposed to be purchased, whatever inputs are required to be purchased by me, I have asked him to directly deliver it to my job worker. Can I take input tax rate? Answer is 100% yes, you can take input tax rate. Now for the first points, section 16 subsection 2 read with rule number 36, debit note is a valid document for taking input tax credit, therefore ITC on of 1,15,000 can be availed by the registered person. Second point, input purchase were directly delivered to Mr. Joe, ITC can be taken as per section 16 subsection 2 where the goods are received in as per section 16 subsection 2, one of the conditions is that the supplier should have actually received the goods or services for taking, the registered person should have actually received the goods or services for taking input tax credit. However, there is an exception which says where on the direction of registered person, if the goods are delivered to a recipient, then the registered person can take input tax credit once the goods are delivered to the recipient. So in this case ITC can be taken. Computers purchase depreciation is claimed on the said GST portion. ITC can you take, sir? No, because they are taking depreciation on the GST also. Section 16 subsection 3. Works contract services availed for construction of staff quarters within company premises. So for staff quarters you have taken works contract services, can you take input tax credit? Answer is no. Section 17 subsection 5 blocked credit. Now please note, sir, should I remember the section number, sir? There are few section number which you should compulsorily remember. One of the topic is your input tax credit topic. 16, 17 and 18, these are the different sections. You will have to remember the sections. including their subsections. 16.1, you don't have to remember. See, section 16 subsection 2 clause A, B, C, that you don't have to remember, but subsections you remember. So this ITC chapter is one of the chapter wherein you will have to remember. You will have to remember the section number. Sir, any other chapter where I will have to remember the section number? See, 7 is easy, supply. 8, you will have to remember the section number, taxability of composite and mixed supply. 9, not required. 10, you will have to remember, which is with respect to what, sir? Your composition dealer. Then 11, not required. 12, 13, not required, meaning if you know the basics, section 12 talks about time of supply of goods, 13 talks about time of supply of services. Section 15, should I remember, sir? 100% yes. 15.1, transaction value. 15.2 talks about what, sir? Inclusions. 15.3 talks about exclusions. Only 3 sections you have to remember, and these 3 section 16, 17, 18 including the subsections you will have to remember. ITC, every section you should know. Then after ITC you have your next topic is what, sir? Your registration chapter. Registration chapter also, section 22 to section 30 are the different sections. You remember the main sections, sufficient. Remember the main sections, and there is a notification also, notification 10/2019. That notification also you remember. Main section plus this notification. Then after this, other chapters which are there, section 49 subsection 5, please remember. Then section 50, remember these 2 sections. You remember these 2 sections, more than sufficient under GST law. Yeah. Question number 4. Z Limited, a manufacturer ... They have given some purchase details. Inputs used for manufacture. Can I take input tax credit? Yes, you can take input tax credit. Goods used for generation of electricity for captive consumption. Sir, goods which are used for generation of electricity for captive consumption means what, sir? I am purchasing some goods for generating electricity which will be used by myself, which will be used for my own purpose. My own purpose means obviously my business purpose. So can I take input tax credit on the goods which is used by me for generation of electricity? Answer is yes, it is for my business purpose. Then cement for construction of godown of the factory? No. Goods for laying foundation of plant and machinery? Yes. Foods and beverages for personal consumption of employee? No ITC. Consumable stores for use for manufacture? Answer is yes, you can take input tax credit. Advice regarding the availability of input tax credit on the following. AMT Company Limited purchased mini bus for transportation of their employees having 16-seater. 16-seater, can it take input tax credit? Answer is yes. B Limited, a manufacturing company, purchased 2 trucks for transportation of its finished goods. Can it take input tax credit? Answer is yes. Hans Premium, dealing in luxury cars, purchased 5 cars for sale. Can it take input tax credit? Yes, it can take input tax credit because it has purchased cars for the purpose of selling. Sun Moon Packers availed outdoor catering services to run a canteen in its factory. The Factories Act requires the company to set up a canteen. Can it take input tax credit? Answer is yes, because it is obligatory by law. X manufacturing of roofing sheets etc. has total ITC of 16,000 rupees and other information. So they have given total input tax credit of 16,000 rupees, in the sense 1,60,000 rupees. Input tax used for raw material, ITC can be taken. Input on account of harvest caters in connection with housewarming ceremony, no ITC cannot be taken. Reduce this ITC. Then input tax on inputs contained in exempt supplies worth rupees 2 lakhs. So ITC in respect of exempt supplies 2 lakh rupees, you cannot take input tax credit. GST pays on cosmetic surgery, that is also blocked under 17(5). Now if I subtract all these things, the amount will come to 1 lakh rupees. Please note, this is a question about apportionment of input tax credit. 17.1, 17.2. So in my class, if you remember, in classroom we had discussed a question with respect to what, sir? Priya provision store. So similar to that, there is a question which they have given. See this Priya provision store, similar question they have given. So I'll directly discuss the question. Now what has happened over here? Total ITC is how much, sir? Total ITC which I have for this month is 1,60,000. On that there are few things on which ITC cannot be taken. So 1 lakh rupees is the total ITC which can be availed by me, out of which 40,000 is towards taxable supplies, meaning full ITC is allowed. On this, no ITC is allowed at all, because they are all either blocked or used only for exempt supplies. So 60,000 is the credit which is called as common credit. 60,000 is the amount of credit which is used for taxable as well as exempt supplies. It is used for taxable as well as exempt supplies. Now this 60,000 credit which is there, no, this 60,000 rupees credit which is there, this 60,000 rupees credit which is there, this is required to be apportioned to taxable as well as exempt supplies. They say that total turnover is 60 lakh rupees and exempt supplies is 2 lakh rupees. So can I say my taxable supplies is 50 lakhs and taxable supplies is 50 lakhs and exempt supplies is 2 lakhs, so total turnover is 60 lakhs. So this 60,000 is going to be distributed to exempt purpose proportionately. This is called as common credit. 17(2) will apply over here. So proportionate credit, 60,000 rupees into 2 lakh divided by 60 lakhs, which comes to 2,000 rupees. ITC cannot be taken by you. Balance 58,000 rupees ITC can be taken by you. So they have asked you what is the total ITC which you can take in this particular month. Total ITC which you can take is 58,000 plus 40,000. This full ITC which you can take, 98,000 rupees. So if anyone is copying, you can please copy. So nice question. But this is a final level question. Okay. MAD Private Limited is engaged in supply of goods to its customer within the states, and it is not liable for registration under section 22 from 20th January 22 onwards. It started interstate supply of taxable goods for the purpose. For this purpose, it applied registration on 28th of January, and the same granted. The registration of the same was also granted. The liability of CGST, SGST for the month of January is 32,000, 32,000 and 45,000 respectively. MAD Private Limited has made e-payment of tax on the due date. MAD Private Limited has provided the following details of stock held on 19th. So on 19th of so this company is making taxable supplies. Since it is making taxable supplies, it became liable for registration. It applied for registration. It started making, since it started making interstate supply, it became liable for registration from this date. See, if you are making interstate supply of taxable goods, you are liable for registration. Who is telling? Compulsory registration, section 24 is telling. So it has applied for registration and that registration has been granted to me. If you become liable for registration, you should apply within 30 days. He has applied within 30 days and that registration was granted to him. Now the question is whether he can take input tax credit on the stock which is there with him. So inputs received on this date, okay, lying in stock. Receipt date is important. Why, sir? Receipt date is important because 1 year, only 1 year old, section 18 subsection 2 says invoice older than 1 year ITC cannot be taken. First item, can I take input tax rate? Yes, you can take input tax. No 2000. Okay, there is one mistake which I have done over here. So 20th January 2023 I became liable and I applied for registration on 28th and it was granted to me. Now I purchased few items. In the year 2021. So it is older than 1 year. So here what will apply, sir? Section 18 subsection 2 will apply. ITC cannot be taken on this item. This is also older than 1 year. ITC cannot be taken. Sir, 1 year will be seen from 19th, you go back 1 year, which is 20th of January 2022. After that, any invoice is there, I can take input tax credit. I can take input tax credit only on this 8,500 because invoice is not older than 1 year. So here two sections are applied. Section 18 subsection 1 clause A and section 18 subsection 2. What is section 18 subsection 1 clause A telling? Where a registered person is liable for registration and applies for registration within 30 days of becoming liable, he will be allowed to take input tax credit on inputs held in stock 1 day prior to the date of liable for registration. That inputs includes normal inputs, finished goods or work in progress. Now in the present case, section 18 subsection 2 says, however, ITC under 18.1 will not be allowed if the invoice are older than 1 year. So in the present case, the purchases which were made on 12/12/21 and 16/1/22, on those ITC cannot be taken because they are older than 1 year. But however, 8,500 within 1 year ITC can be taken. Then on 25th August, Agarwal Limited, a registered person, supplier of textile products located in Bengaluru, purchased one machine for 12,39,000 including GST from one of the supplier who issued the invoice for the same date. Agarwal and Agarwal Limited put to use the machine on the same date and availed input tax credit. Okay, Agarwal sold this machine to a manufacturer for 7,50,000. This amount is excluding GST. Mr. Suresh Kumar on 20th of October 2023. During purchase as well as sale, GST rate was 18%. So first let us take, so this is a question on section 18 subsection 6, supply of capital goods or plant and machinery. 12,39,000 into 18 into 100 divided by 118, I will get amount excluding tax. So which is 10,50,000. Therefore, GST amount is how much, sir? 1,89,000 is the GST. Okay, on this machinery he would have taken input tax credit. Now he purchased in the month of August 2002. So in 2002, and he sold this machinery on which date, sir? 20th of October. Now because he sold the machinery, 18.6 says that you will have to reverse the input tax rate, which is how much? Tax computed on transaction value or ITC reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. So applying this 18.6, tax computed on transaction value 7.5 lakhs is the sale price, that is the transaction value into 18%. How much is it? How much is it? 1,35,000. Or whatever ITC is there, 1,89,000, reduce it by 5% per quarter or part thereof from the date of purchase till the date of sale. So where is it? 1,80,000. 1,80,000 reduce, when did I purchase? August month, August 22. So in 2022 I used it for July, August, September. Even when it is a part of quarter, you should treat it as full quarter. August. So August I purchased, August and September will be treated as full quarter. So it falls under July, August, September quarter. October, November, December. Please note, quarter is a period of 3 months starting from first day of a calendar year. So Jan to March, April to June, July to September, October to December. Now he purchased it on which date, sir? 25th of August. So it falls under this particular quarter. Okay. So in this year, in the year 2022, he used it for 2 quarters. And in the year 2023, how many quarters, sir? Jan to March, April to June, July to September, and October to December also. But sir, he sold it in the month of October. No, it does not matter. It does not matter. It will be treated as full quarter. So 4 quarters. So totally how many quarters? 6 quarters. So reduce ITC by 5% per quarter. So for 6 quarter, reduce it by 60%. Sorry, 30%. 1,89,000 minus 30%. It comes to 1,32,300. So what is the amount you have to reverse? 1,35,000, whichever is higher. 1,35,000 is the ITC which is required to be reversed by you in this particular case. Similar question is given over here. You can solve it. Small question. Miss Sonali made some sales and purchases. You are required to compute the net GST payable. Sales. So how do I solve this kind of question, sir? So very simple question basically. I'll just tell you the format. So whenever this, obviously this kind of question will be asked in your examination, basically first question will be there like this only. This is a very basic question. For 8 marks they are going to ask these kind of question. This question they will never ask for 8 marks, but this kind of question they can ask for 8 marks. Now how do I compute, how do I solve this, sir? First you are required to compute, first step will be computation of tax on outward supply or computation of output tax liability. Then second step should be computation of input tax rate. So whatever the input tax rate is available with you for the month, then computation of net GST payable. So this answer will normally be in these 3 particular steps. So step 1, 2 and 3 will give you 3 marks, 1 marks each. And obviously this question is a very basic question, but in examination there will be some points with respect to for which you will have to write provisions. For example, ITC is blocked or not blocked, etc. So accordingly we'll have to answer. Now how do I answer this? So step 1 I'll write computation. So intrastate supply and interstate supply. IGST, CGST, SGST. 5 lakhs, what is the GST rate? 5 lakhs, intrastate supply 6%. So 30,000 CGST, 30,000 SGST, IGST nothing will come, and 8 lakh into 12%, 96,000 is the GST over here. So my output tax liability is 96, 30 and 30. Then I have to calculate my total input tax rate available. So I have purchases 10 lakh 12,000, which is intrastate purchase, into 6%. So in purchase also IGST, CGST, SGST. So if you have any opening ITC, you write that opening ITC. I don't have any opening ITC. Then ITC on purchases. So first is intrastate supply, which is 61,200. And then we have interstate supply 4,80,000 into 12%, 57,600. So what is the total ITC which I have? 57,600, 61,200, 61,200. So step number 1, output tax liability. Step number 2, total ITC available. Step number 3, GST payable. So computation of GST payable. Step 3, IGST, CGST, SGST. Tax on outward supply is how much? 96,000, 30,000, 30,000. This I have taken from where, sir? Step number 1. Then ITC available. Now you will have to apply 49(5), utilization of input tax credit. What is the manner of utilization of input tax credit, sir? I hope you know this manner of utilization of input tax credit. No, sir. Once please quickly revise. No, sir. Let us quickly revise the manner of taking input tax credit, sir. What is the manner of taking input tax credit? If you have IGST credit, use it first for making the payment of IGST, then use it for CGST or SGST in any proportion. Your wish, use it for any either for CGST, SGST, or equally for CGST, SGST. Your wish. So use it for either CGST or SGST in any proportion. Now the basic condition is that IGST credit should be fully exhausted. It should be completed. Then only I can go to CGST. CGST, use it for CGST first, then give it to IGST. It can never be used for SGST. And SGST, use it for SGST first, and then IGST. It can be never be given to CGST. Now please note, SGST can be used for making the payment of, please note, SGST can be used for making the payment of IGST only when CGST is not having anything with it. So basically IGST can be used for CGST, SGST in any proportion. IGST should be fully utilized, only then you can go to CGST or SGST. SGST can be used for payment of IGST only when CGST does not have any amount to pay IGST, and IGST can be read as UTGST also. So this is a very simple point over here actually, and very important as well. So first IGST credit. IGST credit, how much do I have? 57,000. So I'll take full 57,600. Then CGST I have 61,200. I have to pay only 30,000. So balance, what is the balance left over? 61,200 minus 30,000. 31,200. I will give it fully to whom, sir? IGST. Then after that 30,000 of SGST I will use it for making the payment of SGST. Then balance, how much I have to pay? 96,000 minus 57,600 minus 31,200. So I still have to pay 7,200. So I will take it from SGST. So my net GST payable in cash is 0, and I have excess ITC available. SGST, how much is available? 24,000. 24,000 SGST credit is available at the end of the month. Question number 11. ABC and Company, an accountancy firm having an office in Bengaluru, registered under GST in the state of Karnataka ... Following are the information of outward supplies: statutory audit, ITR filing, internal audit. Okay, amount excluding GST, on that we have to apply GST. So these two are CGST, SGST, and this will be IGST. ABC Limited has incurred an expense following expenses in the month of March for the purpose of providing taxable services. Car purchased by the firm for senior partner, ITC cannot be taken. Office rent paid to the landlord. Okay, ITC normally can be taken on office rent, we can take ITC. Professional fees paid to Mr. Rajesh, a practicing accountant, for professional services availed. TDS was the, okay, some story they have written. So professional services, yes, you can take ITC, provided other conditions we'll have to see. Okay, computer purchased for office purpose, yes, ITC can be taken provided they have not capitalized the tax amount. So amount, they have given amount including GST. Out of the 4 suppliers, or service providers, landlord of the office to whom rent was paid did not upload his GSTR1 within the time limit specified, resulting to amount not reflecting in 2B. So this landlord has not filed his GSTR1 within the time limit, therefore the amount is not getting reflected in 2B. So this ITC of landlord invoice cannot be taken. Compute the net GST payable in cash. Okay, I hope this can be done by you easily. So this also and this also you can take input tax credit. So first step, computation of tax on outward supply. Second step, computation of total ITC allowed. So I'll just quickly do it. Tax on outward supply, first is intrastate supply 1,20,000 into 89%. CGST bar SGST both will be 10,800, 10,800. Second case CGST and SGST 1,60,000 into 9%, 14,400. And last case it will be IGST 1,80,000 into 18%, 32,400. So here you can take ITC only of these 2 invoices. So if I have to do this, where shall I do it? I'll write it over here. So total ITC available will be 18,000 plus 3,000, 21,000 CGST, then 21,000 SGST. So computation of net GST payable 10,800 plus 14,400. So CGST, SGST, IGST 25,200, 25,200, and IGST payable is 32,400, and ITC which is available is 21,000. So here also 21,000, and this Last case, there is no ITC available, so I will have to pay full amount. So net GST payable is 4,200, 4,200 and 32,400, full amount of IGST. Now what are the different things which I have to write, sir? Note number 1. So there will be no note written for outward supplies. Note number 1, car which is purchased, the ITC on the car purchased is blocked under section 17 subsection 5 as the seating capacity is less than 14. Then note number 2, as per section 16 subsection 2, one of the conditions for claiming input tax credit is that the supplier should have filed his GSTR1 and the details of same should be communicated to the registered person. Since the supplier, since the landlord has not filed his GSTR1, the ITC is not reflecting in GSTR2B. That means it is not communicated to the registered person. Therefore, on this invoice, ITC cannot be claimed. Then professional charges, ITC can be claimed on the professional charges which is availed by the ABC company. And computer purchased for office purpose, the computer which is purchased for office purpose, as per section 16 subsection 1, ITC can be taken on goods or services which is used or intended to be used in the course or furtherance of business. Further, it is assumed that the tax component, the depreciation is not claimed on tax component of capital goods. Therefore, full ITC is allowed. Okay, inward supply, A Limited procured the following items. This is the GST amount. Okay, goods used for construction of additional floor of office. Can you take input tax credit? No, you cannot take input tax credit. Free samples to prospective customers? No. Trucks used for transportation of goods? Yes, ITC is allowed. Inputs for trial run, ITC is allowed. Confectionaries, food items for consumption of employees? No. Cement for laying foundation of plant and machinery? Yes, ITC is allowed. Very simple question. Okay, one more question. Is ABC Limited registered? Supplier is engaged in manufacture of dyeing machines. The company provides the following information pertaining to GST paid. Purchased 10 iPads to gift it to its employees. ITC cannot be taken because you are gifting. ITC cannot be taken on goods which are provided as free samples or gifts, or which is lost, destroyed. Payment of club charges as per the terms of employment, ITC cannot be taken. Maxi cab for transportation of its employee from home to office, no, ITC cannot be taken. Then calendars for distribution to its customers, ITC cannot be taken. Works contract for installation of RO plant in factory, only on this last item ITC can be taken. Okay, we have how many more questions? Okay, 3 more questions are there. So here question number 60 is basically theory questions which I have taken from your institute material, and other questions, only theory questions are there that you just go through it. I have given it with answers. Theory questions I have given with answers. 2 questions, both these questions I will do. Nice and beautiful, good questions. So Z Limited, a registered dealer, a supplier in Ranchi, has manufactured ... So they have given the details of sales and purchases for the month of September. So the details of outward supply within Jharkhand, outside Jharkhand. Okay. Then so this is with respect to sales. Then purchase of raw material from a registered dealer within Jharkhand, which includes 2 lakh rupees from Krishna, who is a composition dealer. So here 7 lakh rupees I will be able to, my normal purchases is only 5 lakhs. Okay. Bus purchase from a registered dealer for ferry of 25 workers. Yes, ITC can be taken because it is for 25 workers, 25 seater bus. Then they have given GST rates over here. Opening input tax credit they have given. Very simple questions. Very simple question. What I'll do one thing. I'll add a sheet over here. And what is this? Z Limited. Computation of tax on outward supplies. Particulars: IGST, CGST and SGST. Sales Jharkhand sales outside Jharkhand. You write properly in examination. I'm just scribbling now. You don't have to do that. So 24 lakhs into something, and next it is 5 lakhs. What is the tax rate for sales? His outward supplies. He sells machines and grinders. For that the tax rate is 18%. So 9% CGST, SGST, 18% IGST. So how much is the tax amount, sir? 24 lakhs into 9%. 2,16,000 CGST, 2,16,000 SGST. 5 18s are 90,000, I think. 90,000 rupees IGST. So what is the tax on outward supply? 90,000, 2,16,000, 2,16,000. Point number B, computation of total input tax credit available for the month. Particulars IGST, CGST and SGST. First, opening input tax credit 20,000 CGST, 5,000 SGST, 95,000 IGST. So IGST is 95,000, CGST is 25,000 and 5,000 is, this is 20,000, not 25,000. Then add ITC on inward supplies. So what are the different inward supplies which is made? Point number 1, I have made a purchase of raw material. So raw material 5 lakhs into GST rate on raw material is 6%. 6%. So we'll see whether it is same states. Yeah, within Jharkhand, so it is 6%. CGST, SGST. 5 lakhs into 6%, 30,000. 30,000 CGST and 30,000 SGST. Please make sure that you show this computation 5 lakhs into 6%. This computation is compulsory required to be shown, and also write a note. Then truck which is purchased is worth rupees 12 lakhs and GST is 14%. It is purchased in Jharkhand only, Tata Nagar, Jharkhand, so within the states. So truck, it is 12 lakhs into 14%. IGST nothing is there. One lakh 68,000 and 1,68,000. So total ITC. So here also one note number 2, 95,000 2,18,000 and 2,03,000. So this is the total input tax credit which is available with you. Now for these two computation, whatever you have done, this is an 8 marks question which was asked in your examination. So for these 2 points which you have written, how much marks will I get, sir? Normally, because this will always be right of students who have basic knowledge about the law, they will always do this part right. How much marks will I get, sir? Only 2 marks. 8 mark question, only 2 marks, sir? Yes. 1 extra marks will be given if you write that note. Note number I have given. No, that note also I should write. I'll write it later. Then part number C, computation of net GST payable in cash. Particulars IGST, CGST, SGST. Now here point number 1, output tax liability as per working note number 1, I mean that point number 1 which we did above. How much is that? 90,000, 2,16,000 and 2,16,000. Then utilization of input tax credit as per section 49 subsection 5, very important section number, you should know this section number. So you should write the section later. I mean, how do you apportion this input tax credit? First one, I am apportioning IGST. How much IGST I have with me? As per my second working note, I found that the IGST which is available with me is how much, sir? 95,000. How will I utilize this 95,000? IGST, first I will pay IGST. How much I have to pay to IGST? Only 90,000 I have to pay. There is still 5,000 left over. Whom will I pay this 5,000? Now I can pay either to CGST or I can pay to SGST. Now what I will do is, by seeing the total credit, no, I feel that SGST has less credit with it. I feel that SGST has less credit with it, so I will pay it to SGST, because see, 2,16,000 is what CGST I have to pay. CGST has full credit of 2,18,000. So if I pay CGST, then my out-of-pocket expenses for SGST will increase. So what will I do? I will pay it to SGST. So balance 5,000 I am paying it to whom, sir? SGST. I am not paying anything to CGST. Sir, can we do that? Answer is 100% yes. Then CGST credit is there. How much credit I have? 2,18,000 is the credit which is available with me. I am using how much? 2,16,000. Can I pay CGST to SGST, sir? No, I cannot pay. Correct? And IGST does not need it. SGST credit I have. How much I have? 2,18,000. How much is my liability, leftover liability, sir? Credit I have 2,03,000. Now 2,16,000 is what is my liability, out of which 5,000 SGST gave me. So I still have to pay how much? 2,11,000. How much credit I have? 2,03,000. So full 2,03,000 I will have to use it. So now this I don't have anything to pay. This also I don't have anything to pay. I have to pay 216 minus 203 minus 5, 8,000 rupees. So here net GST payable in cash, and also further ITC of CGST of rupees 2,000 is available as input tax credit. So what is the tax which you have to pay? 8,000 rupees. And what is the credit which is available with you? 2,000 rupees ITC credit is available. The credit of which, sir, CGST is available with you. That extra amount is available with you. So now I will have to write note number 1, note number 2 and note number 3. 3 notes, 3 marks. Note number 1. The raw material which are used as per section 16 raw material which are used for the purpose of business, ITC can be taken on such raw material. ITC can be availed on such raw material. However, 2 lakh rupees worth of raw material is purchased from a composition dealer. As per section 17 subsection 5, the tax which is paid under composition, ITC can be ITC on that purchases is blocked. So only on the 2 lakhs ITC is blocked. Total purchases which were made by me was 7 lakh rupees. So on that 7 lakh, only on 5 lakhs I am taking input tax rate. Then second, note number 2, ITC on truck which is used for transportation of the goods can be availed. It is not blocked under 17 subsection 5. Then for note number 3, note number 3, you will have to write this. You will have to write this. You will have to write this utilization of input tax credit. Okay, then the next question, very beautiful question asked in your previous attempt. I think it was asked in May 22 attempt. Nice question. When there was a small amendment, they have asked this question. Ajay Limited, a registered dealer, 8 marks question. Ajay Limited, a registered dealer in Patna, is engaged in various types of supplies. The company provides the following details for the month of January 2023. Okay. Outward supply of goods during the month. They have given market value of the goods and the transaction value. Now the beauty is they have given that sales is made by Mr. Ajay. So Ajay made a sales within the state of Bihar and to other states. Now they have given market value and transaction value. What should you take? What should you take? Should I take market value or transaction value, or should I take whichever is higher? Compare both of them, whichever is higher. Now what is value of supply? Value of supply is transaction value. So market value, whether though they have given that information, it is useless for us. I will take transaction value, and on this I have to compute the tax. Services provided to state government of Karnataka for conducting computer training program for its employees. Total expenditure incurred for the said program was 90,000, out of which 63,000 was borne by the state government. Now what is this point with respect to? This is a point with respect to your exemption. So exemption point says where any expenses is incurred by services provided by any person to state government, where the expenses where the amount is paid by the state government, then that is exempt. But exemption will be given when how much is paid, sir? 75% of such expenses should be paid. Ding 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 ding. Amendment. There is an amendment on this point. Where is that intermediate? Then exemptions updated. Services provided to central government, state government, local authority, where the total expenditure for such services are. Where is my material? Just a second. Jing 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 jing. Intermediate only it should be here. Tuck 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 tuck. Yeah. Expendi. Now there is a small amendment. See. Services provided by central government, state government, union territory, local authority under a training program for which the total expenditure is borne by central government, state government. So before this was 75%. Now it is anyways total expenditure. 100% of the expenditure should be borne by central government, state government. Then only the exemption will be given. So if you see your suggested answer for this question, they will give as per that law 75%, but anyways we will do it as per the new law which is there. So if I take 75% also, 63 divided by 90, how much is this? Which comes to 70% only. So anyways it is not exempt. Anyways this particular item is not exempt. Anyways this is not exempt, this is taxable. Exemption will be given only if the total expenditure for you, or exemption will be given only if the total expenditure is borne by the central government, state government, etc. So in this case the expenditure is not completely borne by central government, state government, only 70% of the expenses is borne, therefore it will become taxable. So this is also an outward supply which is taxable. Stock transfer without consideration to its own branch in Bihar branch has a separate registration. If you have a separate registration, section 25 subsection 5 will be applicable. Section 25 subsection 4 will be applicable. You will be called as, you will be deemed as distinct person. So the value is 20,000. This also will be taxable. Outward supply, this also will be taxable, and this is anyways taxable. Intrastate inward supply from various, so this is purchase. Intrastate inward supply from various various services for use in the course or furtherance of business. 30 invoices are there, 6,50,000. Almost all the amounts are excluding GST. Okay, during the course of arranging and filing documents, the accountant of Ajay Limited observed that invoice of 30,000 dated 12th December 2021 was omitted. 12th December 2020, in this case it will be 2, was omitted to be recorded in the books of accounts, and no payment was made till March. The invoice was issued by Mr. Mukesh of Patna, from whom Ajay Limited had taken car rental services. The invoice included cost of fuel. Anyways, see now what they have telling is there is one invoice which is missing, for which he has not made the payment also, and this invoice is with respect to car rental services. Point number 1, invoice you have not recorded the invoice, you have not recorded it in the month of December. So the question is, I did not take the input tax credit in the month of December. Can I take the input tax credit now? Normally yes, you can take input tax credit, but this invoice is in respect to whom, sir? Car rental services. Now what will come into picture? Section 17 subsection 5 will come into picture. What is 17.5 telling? If you are leasing, hiring, renting of motor vehicle, vessels and aircraft, ITC cannot be taken, ITC on that is blocked. So anyways, he had not taken input tax credit in the month on this invoice in the month of December. Now can you take input tax credit? Yes, as per 16 subsection 4, ITC can be taken till 30th November of next financial year or date of filing annual return. But anyways, for this invoice, ITC is blocked. It is blocked as per 17.5. Therefore, you cannot take input tax credit at all. So you can ignore this invoice. So from this you will have to subtract 30,000, 6.2 lakhs. Rate they have given. Okay, car rental, ignore ITC. Inward and outward supply are taxable at 9%. No opening balance of input tax credit is available. Out of 30 invoices of inward supplies, 6 invoices with a taxable value equal to 1,50,000 were E invoices, in which invoice reference number was not mentioned. If it is an E invoice, invoice reference number is also compulsory required to be mentioned. As per section 31, that is the tax invoice chapter, it says invoice reference number also should be mentioned. See, rule number 36 gives you the list of other documents based on which you can take input tax credit. One of such invoice is that tax invoice. That tax invoice should be as per section number 31. As section number 31 says, if you are a person to whom e-invoicing is applicable, then you will be able to take input tax credit only if invoice reference number is mentioned. Now in the present case, they say that it is not mentioned. However, all the invoices were duly rectified in GSTR 2B for the month. Okay, please note what is this point telling. Beautiful point. Out of 30 invoices which he has, 6 invoices worth rupees 1,50,000, invoice reference is not mentioned, invoice reference number is not mentioned. However, they are reflecting in GSTR 2B. These are reflecting in GSTR 2B since the supplier has filed the GSTR 1. Now, though they are reflecting in GSTR 2B, you cannot take input tax credit on these invoices because the invoice reference number on these invoices is not mentioned. So, one of the basis of taking, one of the condition is that you should be having the possession of tax invoice, debit note, or any other tax paying document. This tax invoice should be as per section 31, and section 31 says if it is an e-invoice, then it should compulsorily have invoice reference number if you want to take input tax credit. Now, though it is reflecting in GST or 2B, I will not give you input tax credit because invoice reference number is not mentioned on these documents. Subject to the information, conditions for claiming input tax credit are complaint. Please, you are required to calculate the tax which is payable in cash. Very simple question. Basically, if you would have attended this question in examination first, no, obviously out of fear, you would have thought that, I mean normally this kind of question you should read the question carefully. So there are 2-3 points which are very tricky. Like for example, I felt that this point normally it will not click in students' mind, and there may be some GUBE students for whom this 4 point may not click, but it is a very simple point. And this point which is there, no, out of 13, this car rental, maybe it may not click, but even if it click, this is something where they will do a mistake. So this is something which where they will do a mistake. Very beautiful question, very simple question. Now computation of, so directly computation of tax on outward supplies. So outward supplies, particulars, IGST, CGST, SGST. So what are the outward supplies? Outward supplies within the states 4 lakh, other states 1 lakh. Intra-states 4 lakh into, they say 18%, 4 lakhs into 9%. So CGST will come to 36,000, SGST will come to 36,000, and interstate supply is 1 lakh into 18%, which is equal to 18,000 rupees. So this is with respect to point number 1. Services given to government, it is taxable 5 lakh rupees. Entire amount is taxable. This is services to other states, interstate supply. Training to government, interstate supply, how much is the value? 5 lakhs into 18%, 90,000 rupees. Branch transfer, same state. So CGST, SGST will come, how much, sir? 20,000 rupees. $1,800. Tax on outward supplies 1,08,000, 37,800. Now sir, are there any notes which I have to write 100%? Yes. So first note will be on this training. Second note will be on this. So in respect to training, what will you write, sir? As per notification number 12/2019, services provided to central government, state government, training services provided to central government, state government, local authority will be exempt if the total expenditure for the training is borne by central government, state government, local authority or union territory. In the present case, since only 70% of the expenses is borne by central government, state government, local authority, etc., in the present case it will be taxable. Then branch transfer, note number 2, as per section 25 subsection 4, where a person has obtained or is required to obtain more than one registration, whether in a state or union territory, then each of those registered person will be treated as distinct person. Since there is a supply which is made to the branch which has obtained a separate registration, it will be deemed as distinct person, and the supply made to a distinct person will be taxable accordingly. Then point number B, computation of total input tax credit. So there is actually only one details of purchases, 6,50,000. Purchases made, 6,50,000. Now please see me carefully what I am doing over here. See it carefully, whatever I am doing over here, see it carefully. So from this 6,50,000, from this 6,50,000, from this 6,50,000, which is the purchases for the month of January, 1,50,000 which is there, 1,50,000 which is there, actually from this 6,50,000, 1.5 lakhs which is there, that 1.5 lakhs e-invoices which are there, for those invoice reference number is not available. So the balance amount which is there, 6.5 lakhs minus 1.5 lakhs is 5 lakh rupees. On this 5 lakh rupees, only ITC will be allowed to me, which is how much, sir? Within the states, intra-states, which is 9%. So 45,000 CGST I can take credit and 45,000 SGST. See, before I had written one point, car rental, actually this invoice was pertaining to December. So obviously the information will not be, this is not with respect to January. So these 30 invoices which they are talking about is only with respect to January. So I had reduced this 6,50,000 minus 30,000. I should have not reduced it. Now point number B, with respect to missed invoice of December, ITC cannot be taken. So total ITC is 45,000, CGST 45,000, SGST. Here also you will have to write a note, note number 1, note number 3 and note number 4. Sir, what note will I write for 1,50,000? The base, as per section 16 subsection 2, one of the conditions for claiming input tax credit is that the possession of tax invoice, debit note, credit note. This tax invoice should be as per section 31. It should be as per the law, as per the GST law. And one of the conditions which with respect to tax invoice specifies that if it is an e-invoice, it will be treated as a valid document only if the invoice reference number has been mentioned on that particular invoice. In the present case, invoice reference number has not been mentioned in the invoice. Therefore, the invoices worth 1,50,000 ITC cannot be claimed. Then the missed invoice pertains to car rental services, ITC cannot be availed on this invoice. So this is the total credit which is available. So computation of net GST payable, IGST, CGST, SGST, output tax liability is how much? 1,08,000, 37,800, 37,800. Then utilization of input tax credit, IGST, I don't have any credit. CGST, first I will give it to CGST. 45,000 is what I have, but I have to pay CGST only 37,800. I will give 37,800. Whatever is left over, 45,000 minus 37,800, 7,200, I will give it to IGST. Similarly, SGST, I have 45,000. I will give 37,800 to SGST, balance 7,200 to IGST. 1,08,000 minus 7,200 minus 7,200, 93,600 dash dash. 93,600 is the amount of tax which I have to pay. 93,600 is the amount of tax which I have to pay. So this completes our discussion on this beautiful tax. This completes our discussion on this beautiful topic called as what, sir? Input tax credit. Nice chapter, important chapters. We have solved some beautiful questions also, and there are some theory questions which are there. You can just go through all these theory questions. Answers also have been given over here only. Okay, let us meet in our next class. Till then, tada, bye bye, take care. So in our tomorrow's class we are going to discuss about registration. Last class we'll discuss about registration. Bye bye, take care.